Hang Seng is declining down 0.6%.
A lot of progress on the digital public infrastructure, and I think both of those are making India more attractive as a destination at this point.
A mild recession doesn't matter that much. They can cut rates eventually. They probably will sometime.
I think at some point of time we'll get a dip, and maybe in fact risk reward could favor a buy, provided we end above that 18,000 odd mark.
Absolutely flat. The Nifty holding on to 18,050.
There's been a bottoming out process. We think that might continue.
Online gaming business historically has been a profitable business.
Sources tell CNBC-TV18 that the government currently does not see merit in extending subsidies under FAME for a third time or making a fresh allocation.
The benchmark indices are up close to about 0.3%.
The HDFC Life Insurance has applied with the insurance regulator IRDAI. That is to seek an approval from the regulator with respect to entering the indemnity health insurance market.
We've invested substantially in a range of new products for EV, ranging from scooters to premium motorbikes, three-wheelers, passenger and cargo, and also electric bicycles for the European market.
This year we expect the growth to be around 7% for the financial year 22-23.
Benchmark indices were currently up close to about 115 points in the Nifty.
Well, that was the day so far. You're with us here on Closing Bell, live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me today, my colleague Reema, here, of course, in the studios. And Mangalam is joining us from the newsroom floor. Guys, hi, good afternoon.
Hi, good afternoon.
Last 30 minutes, and it's, I mean, so far so good. It's an up and up kind of a day that we've had. So absolutely nothing, very little for bulls to complain about. There've been these bouts of profit taking which have meant like 30-40 point pullbacks, but so far it's always come back in a pretty good way. So I think we're sort of in the midst of one of those pullbacks and recovery. 18,162 is where we are at. In terms of levels, the Nifty today at the day's high got to 18,181. I mean, which is the day's high. The reason I'm mentioning that is because 18,191 is the 38.2% retracement of the full fall from the all-time high of 18,887 to the recent low of 17,761, which was the low last week. So the 38% retracement is 18,191. We got to within 10 points of it, and then the market kind of turned. That is the first, in a way, resistance. The 50% retracement, if that comes in a little higher at about 18,324. So just two numbers. And of course, as we've been saying, the recent low, which was made 2 days back, I think, that kind of becomes a reference point, which should hold. Metals are doing well, IT is doing well, and mid-caps generally are doing well. The IT index slowly but surely is inching higher, like maybe the NASDAQ. I mean, you're seeing these small gains, sometimes 1%, 1.25%, 0.5%, but moving up. Metals are doing well. We'll talk more about that. The broader markets, unlike yesterday, are not doing too badly. PSU banks have lost a bit of steam. They saw this, decent pullback day before yesterday, which is Monday. But I think today, like yesterday, they're seeing about a 1% cut once again. So that's the, broad kind of lay of the land as far as markets go. An hour to go to close. Reema, hi.
Hi, and today Bank of Japan didn't rock the boat, right? Its surprise in action also provided that calm that we saw in the Asian markets. Japanese index up 2.5%. Hang Seng was down 0.5% when the Indian markets opened for trade. And now when we are close to closing, the Hang Seng is up close to about 0.5%. So there was a swing of 1% from the day's low. Taking stock of where the markets are at 2:30 p.m., it's the Nifty Metal Index, which tops the chart. Tata Steel, Hindalco are the top two gainers. Percentage points point of view on the benchmark indices. So Tata Steel and Hindalco, SAIL, Vedanta outside of the index doing pretty well. You spoke about the Nifty IT. The Nifty IT index has been up for the 6th day in a row. Year to date, it's up close to about 3.5%, but names like HCL Tech have rallied 7.5% since the start of the year. L&T is another big mover. That's the third biggest mover on the Nifty. That's rallied close to about 2%. It's a fresh stock lifetime high on L&T. BofA Securities has said that perhaps it's the start of a new private capex for FY24, FY25, and L&T, as we know, is one of the big plays when it comes to India's private capex theme. Apart from that, you spoke about PSU banks, and the year hasn't played out right the way we expected. Just if you had taken a poll at the end of the year, everyone would have said the uptrade in PSU banks will continue, IT will continue to trend lower, and that's completely reversed. PSU banking index is down 1% today. Year to date, it's down to 2 to 2.5%. On the flip side, IT, where the expectations were very low, valuations had come down, IT is the one which positively surprised. But Mangalam, that's markets for you, right? It's very hard to call this.
It is very hard to call this, and usually, more often than not, the consensus usually gets it wrong. It is the IT index which is in a stealth up move that we're seeing. It's outperformed the Nifty bank by a factor of 5 percentage points, and last year the IT index was down 25%, whereas the Nifty bank was up by almost 19 to 20 odd percent. But then again, if you're looking at the market as a whole, it's the HDFC twins for not doing much all of last year and the year before that. Now they've suddenly come in their own funk. In this year itself, they've outperformed. And today as well, as we speak, they're the ones they are responsible for taking the Nifty back closer to the highs of today's trading session. And today's trading session is important from a day's high standpoint, because every dip on the Nifty, like Prashant pointed out, has been bought into. The earlier high on the Nifty was 18,180, and that is still some distance away from the 50-day moving average of 18,288. Now, whether we go to that 18,250, 18,288 sort of mark or not is contingent on whether we cross the 20-day moving average on the Nifty bank, because the Nifty bank once again is upwards of 42,500. The day's high on the Nifty bank is 42,555, and that coincides with the 20-day moving average just 11 points away from that, 42,566. So in this up move that we're seeing in the last hour, can we go past that 20-day moving average on the Nifty bank? If we do so, then maybe the room opens for the Nifty to go ahead and cross that 18,250, 18,300 sort of zone as well, where the 50-day moving average rests. And that is also a level where we've seen a fair amount of resistance in the past. Tomorrow is the weekly options expiry. So ahead of that, we're seeing a fair amount of writing in a lot of puts. 18,100 put actually has added over 1 crore shares in open interest. And for a premium of over 70 odd rupees, the street believes that maybe that 18,050, which is the 20-day moving average, would be an important support to watch out for. 18,000 anyway is an important psychological support, so we're seeing continuous put writing at the 18,000 mark as well. And the 18,000 call writers, the ones who started covering their positions from yesterday, have continued to cover their positions, so that works in favor of the bulls as well. Now the only question is whether the Nifty bank can go ahead and cross that 20-day moving average and make room for the Nifty to go ahead and cross the earlier resistance of 18,250 as well.
Okay, I mean, so those are levels and the F&O sort of action as well. Mangalam, thanks for that. Well, how should you position yourself now in the last 60 minutes? Go long even here or wait? Mitesh is with us with those answers. Mitesh, hi, good afternoon, welcome back. So again, I mean, a 100-point up move, similar to what we had yesterday. And then, of course, yesterday we picked up even more in the last 45 minutes of trade. What's your sense from here?
Good afternoon, Prashant. I think we have been, calling for some kind of pullback rally to about levels of 18,250, and I think that is what is playing out. My sense is that I think, this rally still is, looks like a pullback rally to me, and because we are consolidating about 18,150, good chance that we will head towards 18,250, 260 zones. Only if we start getting past those levels will we look at this rally extending and developing into some kind of a short-term up move. Having said that, I think the idea is very clear. Trade with long bias till we get some kind of negative signals. I think that is still missing. So we're trading with clearly all long calls. Vedanta is something which I like a lot. It's broken into fresh high after consolidation. So keep a stop below 318. Look for targets of 335 here. And Torrent Pharma is a surprise item on the list. Typically, I think we've not been tracking this very closely, but today I think there's a good breakout taking place over there. So that's a buy as well. Keep a stop below levels of 1590. Look for targets of 1675.
Okay, Mitesh, got those trading ideas. Let's focus on some other stocks where we are seeing earnings reaction play out. ICICI Lombard is in lower in trade after reporting Q3 numbers. Surbhi joins in with the fine print and what missed the street expectations. Surbhi.
Hi, thanks for that. So ICICI Lombard is in focus today on back of their Q3 numbers. The company has delivered a healthy 17% premium growth led by health and fire insurance. The PAT growth came in at 11%, slightly lower than estimates due to lower investment income, and that's what the street is concerned about the most. The combined ratio was broadly stable at 104%. The ROE came in at 14.3%, similar to same time last year. The management has guided for continued investments in retail health business, lower combined ratio in FY24, and improvement in ROE to high teens going forward. Most brokerages have cut PAT estimates but still retain a buy rating on the stock. Morgan Stanley has an overweight rating with a target price of 14.95. Jefferies and Motilal both have a buy rating with a target price of 16.20 and 1500 rupees per share. Kotak has a reduced rating with a target price of 12.25.
All right, Surabhi, thanks a lot for that. So that's about ICICI Lombard. Just keep an eye on a couple of these metal names. They're doing extremely well. From the broader markets, we have SAIL, which has spiked to the high point of trade. We do have all the other metal stocks actually doing extremely well as well. So Hindalco's moved to the high point. Vedanta's moved to the high point. Tata Steel has done extremely well, currently at the high point as well. In fact, the entire pack is doing extremely well. This morning we got a positive note coming in from CLSA as well. A good time to get in our market guest for the day. We have A.K. Prabhakar, who's the head of research at IDBI Capital, joining in now. Mr. Prabhakar, thank you so much for joining in. Your thoughts on the metals pack? Do you think it's back on an uptrend right now? Usually we see a lot of cyclical moves here.
Good afternoon, Mangalam. I think so. Almost 30% rally in the global metal prices in the last 3 months, and even Indian prices have started to inch up recently. So China opening up also will be something which is positive for the metal stock. But we need to understand most of the metal stock are near all-time high, whereas they are not. The prices are not back to the all-time high. So one should trade with caution. Tata Steel and JSW are top pick in that.
Tata Steel and JSW are the top picks. Prabhakar, hi, good afternoon. From your sort of research team at IDBI, what are your kind of top ideas, top bets that you're pushing?
Yeah, good afternoon, Prasad. We like life insurance more. And yesterday, New Gen result came. That is one stock we like. 22% is a growth we expect for the whole year, and from next year, next 2-3 years, we expect 16 to 18% growth. We have a target price of 480. This is one thing we like. Life insurance pack is something we like. Defense-related stock and infra-related stock is our focus. So we are waiting for the budget in the next 2 weeks. So that is our focus: defense-related stock and infra-related stocks.
Okay. What have you made of the cuts that we are seeing in ICICI Pru? Now, ICICI Pru reported pretty decent numbers, but yet the stock is trading flat. In fact, from the day's low, it's recovered. But at one point of time, ICICI Pru was lower in trade. And this is despite the numbers looking pretty okay. Your thoughts on that and the kind of reaction that we've seen?
See, we need to understand, the management in their commentary have said they have spent a lot on acquiring the new businesses. So, here, their own business from their bank is just 21%, whereas agency business is higher. So, and they have diversified. 21% from the bank, I think they have well diversified. So, the expenses will be higher for the next 6 months. But going forward, I think the margins will improve. So, we like ICICI Pru. At current price, it is very attractive for a long-term investor.
All right. We're also seeing some up move come by in a couple of these pharmaceutical names. Ipca Laboratories, for instance, is now spiked. And alongside that, a couple of consumer discretionary names as well. Bata has done extremely well. Ambuja Cement moving to the high point of trade as well. Mr. Prabhakar, in the consumer discretionary space, Metro Brands also reported numbers, quarterly all-time high numbers for them across all parameters. Your thoughts in this space? Do you like any of the names?
No, we have coverage on Bata. Now, but after the government introduced GST on 1,000 rupees below, these stocks have been impacted. But I think we need to wait for more results before we can enter in this space.
Okay, need to slip into a short break. Prabhakar, do stay on. On the other side, we'll also be joined by our Alpha Manager for the day, Vinay Jaisingh of JM Financial Services. Welcome back. For the last many days, we've had one up day, one down day. But yesterday and today, markets have been holding firm and the Nifty is now well above 18,150. But there's lots happening in the World Economic Forum taking place in Davos. There is our editor, Shireen Bhatt. Let's listen in to the panel that she's recording right now.
Davos, a lot of the conversations are around global growth, and there is no consensus yet on whether the global economy is going to head into a recession. If it is, will it be a mild one? Will it be a hard landing? I think there is consensus on one story, and that is the India story. And that is what we're here to talk about, from resilience, which has been the story over the past 12 months, to resurgence. What is the roadmap for that going to look like? We are proud here on CNBC-TV18 to partner with the World Economic Forum to bring to you this conversation here. We've got a very special set of guests joining us. The IT and Telecom Minister, Mr. Ashwini Vaishnav, Ms. Smriti Irani, the Minister for Child, Women Development and Minority Affairs, and of course, the Chief of Tata Sons, N. Chandrasekaran. Thank you very much for joining us. Before I get started, again, for context, what are the big mega trends that global investors and domestic investors are looking at when they look at India? Consumption, it is going to be perhaps the largest market on the strength of the fact that we are today the world's most populous country. It could perhaps also be the workforce of the world because we have a very young population at this point in time, and that's the expectation and the assumption and the estimates that many are making. And of course, the other big trends that India could capitalize on, digitalization. And we've made inroads on that on the back of the India stack. What will that mean, not just for the domestic market, but also in terms of taking this global is going to be the question, and also how digitalization opens up the market in terms of access to credit, access to finance, the spending and borrowing behavior of the Indian consumer. And finally, the big energy transition. India has also put together fairly ambitious goals as far as energy transition is concerned. It has its challenges, but it also throws up opportunities. So those are going to be the areas of conversation that I intend to take forward here with the ministers. Minister Vaishnav, let me start by talking to you. As I said, there is no consensus on where global growth is headed and where the global economy is headed. Where there is consensus is that globalization as we knew it has changed. There is a reshaping of the world that's taking place, driven largely by geopolitics, which is now dictating how geoeconomics is going to work. So I want to understand from you, how is the Indian government looking at the multipolar world today, India's role in it, and specifically in terms of the roadmap to be able to get to whether it's 5 trillion or 10 trillion, where do you believe we stand on the reform roadmap? How much more work needs to be done?
Thank you, Shireen. India has approached this entire transition which is happening in the world on multiple dimensions. One, the first dimension is to make sure that India's economy is resilient. There is a good, consistent 6 to 8% growth rate for a complete decade. It's not just 1 year or 2 year kind of thing. The thought process is the thought process and the policy framework which follows is for a complete decade, 6 to 8% growth with very moderate inflation. The second dimension is when the world is looking for resilient supply chains, and as you said in your opening statement, India has a very young population. So how do we attract large number of supply chain participants to India? How do we make it resilient? How do we use our research and development capabilities? And third part, of course, the energy transition as well as the digital stack. So I'll cover all the 3 points. When the pandemic hit and the whole world was going through a very big crisis, which was humanitarian crisis as well as an economic crisis, there were 2 approaches followed by various governments. The first approach was followed by so many countries was send out checks, make sure people get money in their hands. They consume and that consumption will lift the market. There was a whole lot of liquidity pumped in. The combined balance sheets of US Fed, European Bank and Japanese Central Bank, the combined increase in balance sheet was about $9 trillion US. That created a very quick sugar rush kind of growth, but it also brought with it unprecedented inflation. And that inflation is not going to go away so easily. It takes a time because pushing liquidity is easy, taking it out is very difficult, and it's always very painful. On the contrary, India adopted a very pragmatic approach. Fiscal space that any country would have is always limited. It's always constrained. There is no unlimited capital in the world. Anybody can give those MMT theories, but that's bunkum. Don't believe that. Capital is always scarce. Capital is always limited. How do you use the capital that you have? That's a choice that Prime Minister Modi ji made. He made a choice that very focused consumption and support to the most vulnerable groups, vulnerable sections of the population. So about 800 million people got limited financial aid, plus free food for almost third year now. So that was one very important part. Vaccination, free vaccination program. Again, 1.3 billion doses in the first 14 months. By now, we have crossed 2.1 billion doses and completely done on a digital platform. The most important piece of this decision making that Prime Minister Modi ji made was, with limited and focused consumption, focused on the vulnerable sections, he put entire capital of the country into investment in infrastructure. Now, investment in railways, last year the capex was 23 billion US. This year the capex is, this fiscal which ends on 31st March, the capex is going to be of the order of 26 billion US. Same is the story in railway, in highway, in power transmission. That increases the productivity of the country and gives us the long-term growth potential of the country improves. It's resulting into huge employment generation. Today, the country is adding on an average 1.5 million people into formal jobs every month. So that kind of those decisions have shaped the country's destiny over the last few years, and that has put us on a very consistent growth path of 6 to 8%. India is used to an inflation rate of 5 to 7% because large part of energy is imported. So having inflation today at 5.8, 5.9%, that's the latest print. That's very moderate. So high growth, moderate inflation. This we were able to achieve because Prime Minister took very pragmatic and a very focused approach.
So I just want to come in on the point that you made as far as the divergence, as far as the fiscal approach was concerned. While we did see the world move towards great degree of stimulus, and that has led to, as you now point out, a high inflation, in fact, inflation at multi-decadal highs, and now a new era of high interest rates as well, posing a big challenge for central bankers across the world. We've, of course, seen in India interest rates move up as well. So fiscal consolidation is going to continue to be a key priority for the Indian government going forward?
One very important part of this entire decision making was Prime Minister ensured that the fiscal policy and monetary policy, they work in tandem. There are so many examples in the world, I wouldn't take any names, where the fiscal policy was going in one direction and the monetary policy was going in another. Our central bank didn't have to drop the interest rates like a brick, didn't have to increase the interest rate like a balloon. It was a very moderate, very balanced view of things. So our central bank today is in a very good position with a good balance sheet of the central government. Our central government's liabilities are just about 52% of the GDP, and GDP growing nominal at 11-12% is a very good situation to be in. So I think, yes, fiscal consolidation is a very important priority. But what is important is we have to look at growth as the primary driver, moderate inflation as the primary decision point, and combine the fiscal and monetary policy to continue that momentum for next 10 years.
Well, I'll come back to you in just a second, sir, and I will get to Ms. Irani as well, but I want to get the private sector's voice in, so let me come to N. Chandrasekharan. Chandra, Mr. Vaishnav spoke here about CapEx. And for the last several years now, it has been the heavy lifting that the government has done in terms of pushing infrastructure, pushing government CapEx, and that really has provided the fillip as far as growth is concerned. The big question is, when is private CapEx going to take off? Are we at that inflection point at this point? Is it another 6 months out, 12 months out? I mean, you have, from the House of Tatas, a view from steel to consumption to digitization. At this point in time, what's the indication that you get in terms of the heavy lifting that the private sector is likely to do in CapEx to push growth?
I think I'll make a couple of more comments to support the view expressed by the minister. Not only the debt to GDP is currently at 52%. Just after the pandemic, it is 52% from a decade ago of 78%. So we are in a much, much better position today than 10 years ago. So overall, I think our balance sheet and our, even if you take the private sector, overall private sector debt to equity ratio is 0.5. So we are in a very, very strong wicket. Now coming to the investments, we run a large group with portfolio across B2B, B2C, industrial businesses, consumer businesses, tech businesses, traditional businesses. And the consumption that we are seeing is just fantastic, actually. We're not only seeing it in the urban areas, we are seeing it in the rural areas. In fact, the consumption we are seeing in Tier 4 towns for even discretionary items like electronics and jewelry is higher than what we see in Tier 1 towns. So the consumption is very, very strong. We have been seeing that for the last few years, and we have seen it in the first half of the year. Last year, we delivered a growth of 25% on a group-wide basis. And this year, that is the year ending March, the first half, we have already seen 19% growth. In all likelihood, will be 22-23% growth. So I think the consumption-led growth is very strong. And with the infrastructure spending that's being done by the government, will definitely add to this as a tailwind. Coming to the business investments in capital, I can talk for our group to start with. I think we have a very, very huge capex outlay between steel, auto, electric vehicles, renewable energy, batteries, electronics, and a host of other businesses. Our capital commitment for the next 5 years is $90 billion. So I don't know where this fear that private sector will not come in is coming from. But at the end of the day, private sector takes time because we can't just announce an outlay. Government can decide that we are going to make an outlay of $20 billion towards this, and then they can work out the plan. We can't do that. We have to make a business case. We've got to go to the board. We've got to get a spreadsheet. We've got to see what is the IRR, what is the ROE, what is the ROC. Okay, all of this takes time. But I think the opportunity is huge. Opportunity is huge, and I think this 6 to 8% growth, at the low end at 6%, we will achieve $20 trillion by 2047. At the high end at 8%, you'll achieve $30 trillion. So the number will be somewhere in between. And so I think the opportunity is real, and private sector will come in, definitely.
You know, since you talk about the opportunity, I want to connect what we heard from Minister Vaishnav and link that back to you. In this era where one of the mega trends that everyone here in Davos is talking about is the change as far as globalization is concerned, also how geopolitics is reshaping globalization. Friendshoring, nearshoring, these are terms that are coming up practically in every conversation. I know you believe firmly that we should not follow the argument of China +1. It must be an India +1 strategy that we must adopt and take forward. What does that mean exactly?
Can I take a couple of minutes?
Yes, please, please.
So, I believe, I just want to make this point clearly. There are 3 global transitions that are happening. This is for every country, developed or developing. First one is a digital or AI. I call it AI transition. The digital transition is a very broad term. Second is the energy transition, and the third is supply chain transition, geopolitical transition, whatever it is, all the rebalancing we are talking about. And everything else we talk is all within these 3. India is uniquely positioned in all the 3. On the digital transition, the reason we are uniquely positioned is because we've got a fantastic tech sector. We've got a huge talent pool. I mean, the number of tech graduates pass out in India is the highest, and not comparable to any other country in the world. We can combine multiple countries, still they won't match the number of graduates we pass out. Third, in the last 5, 6 or a decade, we have demonstrated that we can leverage technology and do developmental projects and public delivery at scale. And you know, this was most exemplified in the COVID handling. This has to be seen not only as a technology transition, I call it an attitude transition. What has happened in India? The mindset and attitude has changed. Every other country went for a COVID era, a Pfizer or a Moderna. India in the past would have run helter-skelter and see how to get a Pfizer or a Moderna. But in this situation, in the peak of COVID, the country had the guts to say that we will do it alone.
Okay, I mean, that is N. Chandra, and we should cut back to it. He was explaining the country's COVID handling and making an interesting point. Do we have that? If we have, okay, I think we can go back. Let's go
3
back.
billion people. We were all in a call every Monday evening, 7 to 8 o'clock. Business and government. So that's why the digital transition, we are extremely well placed. Energy transition, we are well placed because we are probably the only nation of scale where 2/3 of our growth for the next 25 years is going to come. So all our energy per capita is the lowest in the world. So it will increase. The amount of energy we are going to consume is so much, and all of this is new energy. So we are not replacing the bad energy. We are creating new energy for development. And to do this transition when there is growth, all of us who are in business know growth fixes every problem. You can have any problem, it will all be fixed by growth. I always say the priority should be, 3 priorities should be growth, growth, growth. And I think we have that opportunity to make the transition beautifully than any other nation. The third one, the question that Shirin asked, is India Plus. I think it is not about replacing somebody. The world needs resilience. Resilience has to take precedence over efficiency. Over the last 50 years, we have driven efficiency beyond belief. So now we have to go back to being effective first, then put efficiency second. So the India Plus is for India to take the lead, to build the supply chain is ecosystem. It's not one person's game. Nobody can do it alone. We need partners. We need to work with other countries. We need to work with companies, US companies, Western companies, other companies who are willing to work with you on a transparent basis. So India Plus, when I say that, I mean India takes the lead and builds this ecosystem so that we become an alternate, resilient supply chain for the world. It is not about replacing somebody.
Well, thank you for explaining what you mean by India Plus. And I think this again is an issue that is being debated at this point in time, that as more and more countries like India move towards creating these ecosystems, move towards creating their own supply chains, will it have an impact on inflation in the long term? But that's matter for another debate at another time. Minister Irani, let me address the issue of inclusive growth with you, because as
Okay, that is an interesting conversation with the Tata Sons chairman N. Chandrasekaran talking about India's place, India finding its place in the global supply chain and how that is, I mean, the world's need as well. Interesting chat. We'll go back to it in a bit. Well, 25 minutes to go for market close. Things are looking pretty steady. I mean, nothing significant has happened. We were up 100 points when we started. We were up 115, 18,167. But stocks, of course, are moving around. Let's bring in Vinay Jaisingh, Managing Director, Portfolio Management Services at JM Financial Services. Vinay, good to have you with us here. Thank you very much. I would like a market view to begin with before we get into sectors, etc. And do you believe that, the mood has turned a little bit, right? I mean, more often than not, the view is that, this is a year where we'll underperform and money will go into other markets, etc. It's happened so far, so people tend to extrapolate. So, underperformance is broadly the talk, very different from what we had last year. What's your sense, Vinay? Is it going to play out that way, or will we see something very different?
So two things. First, let's go back last year. Last year, the world underperformed in absolute terms by between 15 and 20%. India was just about flat. But if we were to take the currency, we were down 10%. So we had a relative outperformance versus the global indexes. You start this year, and in the first 15 odd days of the year, India is still flat, but the rest of the world is up between 5 and 7%, and China is up 11 to 12%. So there is some catch-up of China opening up. There is some catch-up of fund flows or FII flows going out of India, going into Korea, Taiwan, and China, and reasonable numbers of $1.5 to $2 billion just in the beginning of the year. So we are seeing that effect of liquidity of FIIs dry up in the country and move to other areas. Not surprising, because valuation too in most of the other parts of the world are far cheaper, and India is close to its 5-year average. For us, moving to your second part of the question, what do we expect in terms of the market this year? We think the earnings resistivity of India is pretty good. We are pretty resilient, especially with banks. A couple of results already come out, and we are seeing between 13 to 14% CAGR of profit growth for results which are out so far. Again, driven with banks at about 20% average for the basket. So it's fair to assume a 14% odd growth in earnings for the Indian market as far as profitability is concerned. Having said that, we are looking at India today more as an absolute market in the next 12 months as compared to relatively cheaper markets in emerging market, which could clearly get more flows coming in, especially in the second half of the year when the questions of recession go behind us.
All right, take that point. Thanks a lot, Vinay, for joining in. As far as individual themes are concerned, I mean, are you still backing the PSU theme? PSU banks, of course, are off their highs, but then we have a couple of stocks which have some triggers for them. Earlier we had Mr. Prabhakar talk about how he likes the defense theme out there. HAL is one of the stocks, and in the PSU basket itself, we have Container Corp, where expressions of interest are likely to be filed soon. Your thoughts on these two counters? I mean, one is a structural shift, whereas the other is a special situation. How would you look at these companies?
These two, again, are two of the companies we very strongly believe in. As far as Hindustan Aeronautics is concerned, there are two more upsides out there. One is, in a way, it's a make in India story. Having a Tejas, which you can sell to the rest of the world, exports are still only 1%. But if I were to dream and look 5 years forward, that 1% will substantially move ahead. The stock is more or less where it was in the last 3 months at current levels of 2,403 odd levels. So, even the P is relatively appealing. We see an earnings CAGR of 2 years of about 10-12%. And then, you see the propelling of earnings because of good contacts, good order book coming in both from the domestic market as well as the rest of the world. Moving to your second stock, which is Container Corp. Again, we are very excited about it for a couple of reasons. First is, as you mentioned, divestment, a special situation. But second, just think about how would you transfer any product which is coming into the country to the end consumer. And here's where Container Corp has a huge monopoly, as far as the rail is concerned. And we really like that asset. Again, it's cash plus, very strong balance sheet. So it ticks the box in a country wherein you're seeing interest rates, or also a world wherein you're seeing interest rates move up. So it's unlevered, that also we like.
Concor and Hindustan Aeronautics. Vinay, afternoon. The theme that you clearly like are some of the stocks where there is at least some headroom on the valuation front. The starting point is not very expensive. Could you give us some more examples of stocks that are on your radar, the stocks that you like, where these stocks are relatively cheaper, inexpensive compared to their peers?
Sure. I'll try to give you a couple of names. First, let's start with the biggest bank in the country, HDFC Bank, right? So HDFC Bank now, in terms of valuation, is close to 2 to 3 year lows in terms of price to book of sub 3 times. If you've got a little bit more, risk-taking appetite, the HDFC warrants as well. The results which came out were pretty good, 20% top line growth on the loan book, looking very, very robust, both on the retail front, on the corporate front. They could have done much better, but they let go, which led to much better NIMs. So, good actions on the return on capital employed for the company as well. So we like that as one, relatively cheaper than what it was in the past. Moving very quickly on to other names. If you were to look at Archean Chemicals, one of the companies which just got listed, it's trading between 11 and 12 times 1-year forward earnings. Most of the companies in its space are trading between 18 to 20 times. Again, a relatively cheap valuation stock, a little bit of make in India because, they have the bromine chain. Their raw material comes from seawater, Gulf of Kutch, makes it look interesting. Another name, again, in a make in India theme, which is relatively cheap, corrected a bit in the market, is Gujarat Fluoro. It's trading at 2-year forward valuation of about 24, 25 times. Most of its peers are trading between 35 and 40 times. Good earnings visibility, relatively cheap to its peers. That fits the bill for us as well. Interestingly, a couple of the names which were expensive as well, be it Devyani or Trent, have also corrected between 20 to 30%. Here, why we like the story apart from valuation is the fact that, when inflation corrects, their raw material will go down a lot. And with the demand both Devyani and Trent have in separate spaces, would lead to a reasonable revenue growth, but, better EBITDA margins in the future.
Vinay, it's a short conversation today, but thank you very much for joining in and outlining the stocks that you like. Need to slip into a very short break. As we do that, we'll get you a check on what dealing rooms are saying in our segment D Street Chatter. We'll also tell you what you can buy today to sell tomorrow, calls from our technical experts.
Welcome back. You're watching us here on Closing Bell on CNBC-TV18, live from the CNBC-TV18 Motilal newsroom. Well, it's looking not particularly bad for the market. A century continues on the Nifty. A lot of these mid-caps are doing well. Trent, when I just spoke about that, that's moved to the high point of trade. Pidilite's also doing well. Pidilite actually, too, has moved well to the high point of trade, just about negative for the week, so recouping all the losses that we saw in the previous couple of trading sessions. FMCG as a pack has done well for the last couple of trading sessions, but the market as a whole has also done well. So let's get in our favorite segment, D Street Chatter now. 2 back-to-back centuries, Nimesh. What exactly is driving this market up?
I guess what's driving the market is lack of intense selling. That's the bigger theme than the buying support from the larger institutions. That's the overall message from the dealing rooms. Even if you look at yesterday's number, while the institutional data looked positive, both DI and FI, but that got skewed because of the Samvardhana block. The seller was a FDI, the buyer seems to be the FIs and the DIs. That's why I wouldn't read too much into the positive number from yesterday's FI and DI data. That seems to be the trend today as well. So again, the flows are mixed is what I understand. The sector of the day clearly is metal names. All stocks are shining in trade. And there is a bit of genuine buying back as well. And remember, for metals, we've been saying this for a while now, right? The dollar index is favorable. The China reopening trade is a big theme for metals, and that's exactly what CLS put out today. And most of the stocks are buzzing in trade today. The other sector which deserves mention is the financials. While the bank Nifty is up 0.5%, it's largely the HDFC twins which is pushing the bank Nifty up. In fact, if you look at outside those two stocks, there is profit booking across most of the PSU bank stocks. That's the overall feedback as far as flows are concerned. So, since the beginning of January, Mangalam, we've been talking about the supports at 17,800 and the downside risk. Now, for the first time, there is a chatter of what could be the resistance. So 18,300 is now again back on the table. People are talking about that's a big resistance level to watch out for. So I guess that's something to track. But the one line answer to the last 2 days of century is lack of intense selling rather than big buying from the larger FIs. Okay, no selling instead of big buying is what's driving the market higher, and 18,300 is what we're looking at. 18,250 to 300 will have a lot of technical levels as well to watch out for in terms of congestions. But you have a bunch of individual stocks, a lot of them. That's right. So the first stock on my list today is Nykaa. We've all been talking about it for the last many days now. Again, in today's state, there are huge volumes and the stock is under pressure. And if you look at this week or this month, the stock is down 15% and there is good amount of delivery being marked as well. So there is intense selling and largely from the larger institutions is what I understand in Nykaa, and that's putting the stock under pressure. So that's the first one. The second stock is JTL Infra. We normally don't talk about this stock, but interesting one. That stock is up 10% in today's trade. I believe there's going to be a board meet for preferential issue later this week, and an influential family office is likely to put in a large sum, and that's the reason why that stock is buzzing in trade today. And the last stock is All Cargo Logistics. Couple of cash stocks which are buzzing in trade, largely on delivery volumes, and All Cargo stands out on back of some strong flows at a leading FI desk in today's trade.
Okay, thank you very much, Nimesh, for that interesting list. As always, we've got about 11 minutes to go before we wrap up on what is likely to go down. Is a good session for our markets. The second consecutive 100-point rally on the Nifty. Currently, even the sensex is up 400 points. Mitesh Thakkar tells us what you can buy today to sell tomorrow. for a reverse trade. Nimesh was just telling us that it's actually lack of selling which is propelling the markets higher. From here on, any trade on the Nifty, on the Bank Nifty or individual stocks?
My sense is that I think, we will maintain a long bias because the index is clearly nicely consolidating above 18,150. So I have Coal India, which after a correction and a consolidation is now reversing on the upside. As a BTST call, keep a stop at about 215, look for targets of 221. And the other one which I like is Wipro from the IT pack. That's a buy with or a BTST with a stop below 400 for a target of 410 for tomorrow.
All right. Thanks very much, Mitesh. Things are looking good, aren't they? So a 100-point gain as we approach the last 10 minutes of trade. By the way, put up Sula. We had the management with us yesterday. Day before yesterday, Sula saw a very large move. And I think today it's up about 6% as well. Prakash Devan is with us for his thoughts on what we're seeing out there. Prakash, good to have you here. So let's just start with Sula. Do you like it? Quant, I think, the mutual fund, they bought 10 lakh shares. But that happened day before yesterday when that stock moved up very substantially. What's your sense on Sula?
So good afternoon, Prashant. So yeah, I do like some of their products, not all. But interestingly, it's a business that's still kind of getting discovered of sorts as on the stock market. What happens is that it's such a small segment, and because you don't have a peer group that you could kind of relate it to, it gets difficult to justify valuations either ways, on the lower side or on the higher side. I think it tends to be slightly expensive, if you ask me, given the fact that this is a very narrow market and has limited pricing power, given the fact that India is still not a country that's trending or tending towards wine consumption as much as the other beverages are there. So if you look at that 2% of a market, there are very few players. Sula stands out very clearly as a dominant player, and hence they have great market share. But any challenger who comes into that space and pricing becomes a point of challenge, they could kind of see a little bit of that erosion. And the last couple of quarters have been fairly severe for most of these players, because wine is one segment where you incur huge costs, especially glass and packaging and all that, and you just can't compromise. I mean, there's no way you move to PET bottles or any other things, and a lot of the packaging is aesthetically built into the entire experience and offering, and that's exactly why they're very difficult to cut down on some of these expenses. And that's where the margins will probably continue to be a little bit under stress for some more time. Instead of these kind of plays, if you look at the beer segment, that's growing at a much faster pace, and we've seen some of the valuations that have started getting accorded in anticipation of a burgeoning market to the likes of Bira on the private equity side. But there's a listed company, which I've tracked quite closely, in fact, and that's called Som Distilleries. Very small company at this point, just about 800 crores plus market cap, but probably is the only Indian brand that stands in the top four after Heineken and Carlsberg and Budweiser. Also, you have. It's better to take up a play in the beverages segment with something that has much more headroom to grow rather than a Sula.
All right, so more beer than wine for you, Prakash. Interestingly, Sula is also being accumulated by a lot of influential investors. Day before yesterday, they released their shareholding pattern for the month of December. And we had Mukul Agarwal's name in the sub 2% holding list. So 1.9% is his stake out there. That's perhaps another reason why the stock has been buzzing around as well. We take your point on the beer versus wine sort of argument from a larger standpoint in the Indian market, Prakash. But, I wanted your thoughts on ITC. They've gone ahead and made this announcement of acquiring Yoga Bar in its entirety over the next 4 to 5 years. The initial money that they will put in is about 175 crores for 40% of the business. 68 crore is their revenue, on target to do 100 crores this year. 45% sort of gross margins for this business. Do you think it's a step in the right direction for ITC? I mean, it's pocket change in their overall scheme of things, but it's a 45,000 crore addressable market opportunity.
Oh yes, absolutely, Banglam. You hit the nail on the head, because if ITC were to go around, inventing or reinventing this particular segment for itself, you know how long it takes, the kind of money that they would end up spending. And remember, this is a niche that has just developed over the last 5-6 years. And you know, the conscious food segment in India is still so small, is extremely small, and it comes with great pricing power because it caters to a very different segment of consumer that's more towards the higher end, right? And that's exactly where ITC can very easily match it with some other. So they sell chocolates, which I mean, I know you are a big fan of ITC's business on the e-commerce side as well, and it's only available there. It's not yet available in stores, but it's high quality coffee, high quality chocolates, a couple of other things that are very exclusive, and this does fit into, you know, the segment which caters to that. So I think it's a good acquisition. They've done a smart thing by probably paying a bit, but then that's a cost of the burn that you would have. And Yoga Bar has actually been very successful in terms of recall. In the conscious food segment. So I think it's definitely a great play. The same things which HUL has been doing by moving into you know, premium products or health conscious products rather than the generic ones. So this is definitely good, and ITC will definitely be able to distribute and market it far more effectively than what a small company did in the past.
Healthy food, that's the way to go. Prakash, do stay on. Need to get into a very short break. As we do that, here is an important piece of information for all our viewers. Don't miss out on the 19 must-have stocks for 2023. Subscribe to Money Control Pro to get the full list.
Okay, welcome back. Just a minute to go for the markets to close. We're going to end 100 points higher, 115 or so, 18,165. 20 points off the day's high. We got to 18,181, which was the day's high. And a little lower than that is where the market will end. Banks also did very well. Bank Nifty now about 0.6% higher. I think the, you know, not quite, I think at the 20-day, but we did sort of at the day's high, we got to exactly the 20-day moving average, and then there was a bit of a slip. The 20-day is at 42,559. We got to 42,555. And then the market pulled back a little bit on the Nifty Bank. Mid caps and small caps did better. Mid caps actually had a good day, and the small cap index did quite okay as well. Market breadth, 1,200 stocks higher and about 1,000 odd stocks lower is the overall sort of stat in terms of advances to declines. Rima.
Well, it was Hindalco, Tata Steel. So metals ruled the roost today. Hindalco, Tata Steel gaining 2.5–3%. L&T is a big mover, 2.5% for the day, 8.5% since the beginning of the year. In the IT pack, Wipro saw gains of 1.8%, and HDFC Bank has been solid, reversing some of the underperformance versus peers of last year. HDFC Bank sees buying for the second day in a row. On the losing side, Tata Motors slips, HDFC Life weak. IndusInd Bank, ahead of numbers, was also down close to about 0.7%. There goes the bell on the Nifty for the day's trading action. The Nifty closes at 18,163, up 110 points. The Sensex gaining 390 points. But we're going to take your leave and closing bell. Tomorrow is going to be an important session for our market. Lots of big results coming through. HUL, Asian Paints from the mid-cap IT space. You've got L&T Technology, Emphasis, Havells as well. That's an important mid-cap company reporting numbers tomorrow. We're going to wrap up on the show. Don't go anywhere. Our full panel interview with N. Chandrasekhar, Ashwini Vaishnav and Smriti Irani at Davos comes up next.